Welcome, everybody. Welcome to the No Shill Zone. My name is Gareth Soloway. We're here with Ben Cowen. How you doing, Ben?
Pretty good. How about you?
Good, man. And I know people sometimes, we were just talking about this before we went live, but everyone's like, oh, why don't they disagree sometimes? Well, when we agree, we're being right? Like you were saying to me. So, you can't argue with that. Like if we were agreeing and we were always wrong, okay, I can understand. That's not good. But yeah.
Right. I mean,
Anyways.
exactly. Like, it's if we both look at the data and it looks bearish, like there's no point for one of us to just take the contra view just for the hell of it.
You don't want to fall on your sword? I don't want to fall on my sword either, but
Gareth, we were just on the spaces and we were talking about Bitcoin sort of breaking below these prior levels here in August, and it looks like it's currently doing that. And we were also discussing this 24.8 level. We want to maybe talk about a little bit about Bitcoin and the importance of that 24.8 level.
yeah, absolutely. So let's jump right into the charts, guys, and take a look. So we do have action in the crypto markets, as you guys are fully aware. We know that we were hammering on this little area right here around 25,300 and change. And you can see on the 22nd, we hit that low on the 1st of September, and then on the 6th of September. And then today we're breaking down. And by the way, just a little tidbit of education. The more you hammer on a level, the weaker that level becomes. The thought process, the analogy would be if I need to get through the door, let's say my cat's on the other side, there's a fire in the house, I got to break in and save the cat. You ram that door once, twice, three times. At some point, it's going to break, right? You're going to break the lock. And the same thing can be said for charts. So look at how on the fourth hit here, it broke through. And now you're coming up to this pivot low right here. And this pivot low is significant because, number one, this is where the BlackRock ETF spot news hit. So that's like psychologically, that's a big level for the market. Number two, if we break below that, you now can go on record and validly say we've now made a lower low, right? Low, higher low, higher low. Even right here, technically, this is a higher low. We break that, we got a lower low. So what are your takes on it, Ben?
Yeah, well, and we talked a little bit about this last week as well, is that Ethereum already put in a lower low, and the altcoin market as well. One thing that it reminds me of is this 2019 move, because in this 2019 move, you can see that Bitcoin was sort of doing the same thing, right? So here's the equivalent of your June low that also occurred in June of 2019, and look what happened. It was in this zone. It even got that sort of that fake 10% pump, just like we got this time, right? Where it went up for a couple of days, came right back down. But then eventually, the day basically before a death cross occurred, we took out that prior low, right? We took out the prior low. And we actually talked a little bit about this in weeks past. We mentioned, if and when Bitcoin does put in a lower low, there could be some type of temporary bounce after that lower low is put in, just like it was over here. But what's fascinating is there still is a potential for it to play out the exact same way. Put in a lower low, get some type of relief into a death cross, only for it to still be a higher low, or sorry, a lower high. I mean, a lower high. That's sort of that would probably be the more optimistic view. There's also a risk of more of a 2015 style event where, once Bitcoin breaks it, there just simply isn't a bid, and then you could get a capitulation down. I know a lot of people did not experience the 2015 market, but I mean, this was basically a 50% drop that all happened within a few weeks,
Yeah.
So that also has to be on your mind. So, I mean, my sort of speculation here is that, as you said, it's a downtrend, right? If Bitcoin puts in that lower low, it's a downtrend. Yep. From there, I'm sure there's going to be some short-term swing trade opportunities, especially for people like you that like to trade that market. But my general expectation is that Bitcoin is just in a downtrend for the rest of the year with a series of lower highs and lower lows.
Are you still so I saw one of the videos you posted on the weekend, and it was about the bands, and it was showing how going back, and by the way, that was a fantastic video, and it kind of gave a low end target right now of around 13,000, but because the band moves up, it could be a little bit higher. But I thought that was it was absolutely amazing, showing how in each cycle, each low cycle, the retrace goes to the lower band, but price is actually higher at that point, right?
Exactly. Look, just go back every single cycle, right? So last cycle, the secondary scare was a higher low, but that secondary scare became sort of the first scare this cycle.
Mm-hmm.
This first low here was where the secondary scare occurred the cycle before that, right? But the first low that occurred in the bear market year was another regression band higher. And you can go back and see this play out every single, and this indicator is something that, you know, we've had since like 2019. It's not, I didn't just code it up last night and say, you know, just fit it. This has been something that we've been talking about for a while. And so the issue is that if Bitcoin were to drop now, then this lower regression band is exactly at the 2019 high, right? That's where it is. I know we talked about that 2019 high as being a potential area of interest many times. So I'm kind of the opinion that if Bitcoin's secondary scare terminates this year, it could be a lower low. If it doesn't terminate until, say, sometime next year, like in the halving year, then it could end up being sort of like a double bottom or even a higher low. So I think a lot of it depends on when it occurs.
Yeah, that's super interesting. I want to show something that I was just playing around with on my charts, and I'm a big fan of parallels. There's something about, and again, just like those regression lines, there's, you know, you look at a chart, it's like, oh, that's just a whole big mess. But there's actually there's some logic to it somehow. You know, chaos becomes logic or just structure. And so what I was doing was I was taking this pivot line going back to basically pre-bull market 2017, connecting it through the lows of 2019, which then connects right exactly through the COVID low. And I think it's just incredible. But what I do is I love bringing up these trend lines, right? Because what we see is that if we look here, right? So if we look at this high from 2019, it coexists with a perfectly parallel line from the lows that we put in right here, which is, again, parallel to these lows going literally back 5-6 years now. On Bitcoin cycles, on its low cycles. And then what I love to show is like, okay, so, you know, you say, okay, that's a fluke that it just happens to align with this pivot, and then right through these lows, but then drag it up and keep the parallel, right? And drag it up a little bit further and look at what you get, right? So now we're kind of into this pivot high, the 2017 highs. And what we see is it exactly coordinates with this high, and we pierced it here, and that's exactly where we're starting to break down from right here. And lastly, I'll just drag it up one more time and bring it up here, and look at that. So the low of the bull market 2021, you know, the 30,000 low, coordinates perfectly with a parallel that goes right to this line and the two highs from the Bitcoin bull. And again, to just bring that back into focus, that means that this high, which coordinates through this low and this low, is perfectly parallel to this line here from 2017, 2019, 2020. And it makes me wonder, right? You know, this is extrapolating it out. At some point, do we end up coming down? And I don't have my trend, you know, whatever. But the point is do we eventually come back into this lower level here, which is actually around that 10,000 level? So again, you know, you have the kind of regression bands, but in a worst case scenario for me, could we retest that low? Because all the other cycles, that's a perfect trend line right there. So anyways, just kind of amazing how lines align.
I would say that if we were to test that low on the trend line, it could be sort of like a March 2020 event where you only tap it, right? And like, it's not like necessarily everyone's going to be able to just spend 6 months loading their bags at that level. It could just be something that happens when everyone's sleeping and everyone sort of just then measures the bull market returns from that low, even though no one actually bought it, right? But there's another chart as well, and we talked about this a little bit, is this Bitcoin divided by M2. And this level that we've been rejected off of is coincidentally the same level that we topped out at in 2017. In fact, I mean, I know when you just look at Bitcoin price, we're obviously above the 2017 highs, but when you account for M2, which I think we all should, especially considering that M2 increased about 44%, that's how much the average house price also increased, you know, was about 42 to 44%. The S&P, I believe, from those pre-pandemic highs increased about 44%. So, you know, when the money supply sort of rules, you know, the direction of these markets, I think it's worthwhile to look at that and say, you know, this level that we just got rejected off of, not only was it the 2020, the June 2021 low, but it was also the 2017 high. And this could be a tough level for us to break for some time to come. Now, I think we probably will break it eventually, but I don't really think it's going to happen until we get back to QE.
And are you still in the camp that QE probably starts next year again in some form, whether it's lowering rates or printing money?
My guess is, I mean, I guess I would say worst case scenario is that it might not start until 2025, but my base case is that it's going to start in 2024, because I think that all the lag effects that that will sort of take place from all these interest rate hikes and all the QT that have already occurred, that's going to start hitting. And you know, when you're in an election year, there's going to be, I think, some political pressure for the Fed to sort of make things a little bit more accommodative. It doesn't mean they're going to go back to 0% interest rates, right? But you know, they could drop it back a little bit, or they could just stop their, you know, QT for a little bit. It's all going to depend on the stock market, right? I mean, I people ask me all the time, like, well, when do you buy alts, right? When is the time to buy alts, right? Everyone calls for alt season. You know, I would say one indicator would be, as long as the stock market is not dropping, it's probably too soon to buy alts, because the Fed's going to remain hawkish. They're going to keep going through this until it has a material effect on inflation, and it's not going to material affect inflation until asset prices are lower, right? And asset prices aren't going to go lower until they've held rates sufficiently high for a longer period of time. So if you think back to last cycle, when did alts bottom? When did Total 3 bottom? It occurred 2 months before the halving, but it also occurred when the S&P finally dumped.
So, you know, and one of the big questions, obviously, investors overall, they want alts, and I know both of us think the alts are going to still suffer. But like, is there a point where it's worth it to accumulate Cardano, for instance, which is now at 24 cents? I mean, is it 15 cents? Is it 10 cents? Is it 5 cents? Is it a penny? I mean, you know, is there a level that you've isolated down, or you're just what you kind of do is say, well, when I see that turn, then that's where I would step in?
So I would basically, I don't really care. First of all, don't marry an altcoin, right? No, I don't really care what altcoin it is. People get attached to these narratives about like, oh, well, don't buy that alt because it has this stigma associated with it. I don't care about the narratives, right? And I know you don't either.
Yeah.
I care about their Bitcoin pairs, right? And right now, I think alt Bitcoin pairs, this is total 3 minus USDT divided by Bitcoin. I think they're likely going to take a hit here again. But since you mentioned ADA, I will at least pull that one up. ADA Bitcoin is, you know, in my opinion, likely going to head down to around 400 Satoshis. Okay, so that's my expectation. And the reason why I assume that is because I sort of have this assumption that altcoins are oscillators against Bitcoin at best, right? So most of them just bleed against Bitcoin, but at best, maybe some of them oscillate, right? Where they go between a pretty well-defined range. And so, yeah, I think that, you know, if ADA Bitcoin drops down here and then holds these lows during, you know, sort of the continued Bitcoin USD downtrend, then you might start to get interested in it, right? It's sort of like if you were to look at Solana Bitcoin, right? Look at Sol Bitcoin. You see these lows that it's put in here. Like I put in a low here in January or December of 2022, and then I put in a low here again in June of 2023. And I think we talked about this before, right? Like if it can hold this low in a Bitcoin USD downtrend, then that would bode well for it in the halving year, in the post halving year on its USD pair. But the great thing about this sort of theory is you don't have to guess if it's going to hold or not, right? You just kind of sit back and wait and see, you know, does it hold or not in a Bitcoin USD downtrend? If it doesn't hold, then it could become a relic of a prior cycle and not really see those same types of games. If it does hold and it doesn't go just with Solana Bitcoin, it goes for all these alt Bitcoin pairs, then it would be sort of indicative of that altcoin potentially showing some strength for a future bull market. Is that like, what are you looking at for long-term holds on some of these altcoins?
Oh my goodness. I'm with you where like I don't pretend to know enough of the inner workings. It's not my expertise. So like, you know, for me, it's more just, you know, there'll be a certain point where it looks like things have panicked enough where I might just tuck a small amount away. But I think it's important to recognize that in my portfolio, it's going to be like 60, 70% Bitcoin, maybe 20 to 30% Ethereum. And then I'll take 10% that I'm willing to lose essentially and be like, all right, let's just like basically shotgun it across the board. Because to be honest, like, you know, I think this is such a big important thing is like, if you look at what the top coins were in 2017 or you know, they're generally not the top by market cap now. You know, so I think again, to try to guess is like, I don't have that knowledge. Others might have it, but for me, it's more just, you know, guessing and then just throwing a tiny bit at everything. And then if, you know, listen, if one does 100x, all right, you're good to go.
Right. And we also, I think another metric that we talked about is this net liquidity model, right? Where as long as liquidity is going down, then why would I assume that the altcoin market is going to see any sustained,
right?
you know?
I think that's so important, and I feel like in society, at least in the investing world, people aren't giving enough credit to the sucking of money out of the system right now. I mean, if you think about how fast interest rates went up, the amount of money that's getting locked in. I mean, people are rotating money into money markets, into bonds, into. I mean, they're paying compared to what it was a couple years ago, an incredible amount of interest, which is now, by the way, above inflation. Right there, you could argue that prior, when inflation was 9, getting 4 or 5% on a treasury, well, that's still not even beating inflation. But now you're beating inflation, and you have to say, okay, we're entering this period. We have the elections next year. There's going to be a mess with that, and then you have all these other things with how does the economy really do during this next period with as it absorbs these rate hikes. And then keep in mind, 6 to 12 month lag on rate hikes, guys. That means we haven't felt the full effect of what the Fed has done yet.
Right. And I mean, the thing I go back to, especially with the alts, is like, they basically did nothing impressive when Bitcoin was going up. So like, what are they going to do when Bitcoin goes down?
Yeah.
And, like, I know a lot of people look at this chart and they might say, well, it could just be a double bottom. It could be a higher low. And that might be true. But I also can't get past this idea of this just simply looks like NASDAQ.com crash 2.0, right? Double top off the 50-week, secondary test of the 50-week, get rejected and go down. I mean, that's exactly what the NASDAQ did in the .com crash, right? Like
exactly.
It is that double top off the 50-week followed by back testing it again, right? Like right here, right? And I still have the lines drawn from last time, right? Double top off the 50-week, back test it, and then just go down. And this period here lasted. That might be useful to sort of project out. Like from the secondary touch of the 50-week here, it lasted another 30 weeks. So I mean, where does that? I don't know exactly where that would put the altcoin market, but let's just say 30 weeks out from this second hit. So like right here, 30 weeks out from there puts. And by the way, that would be that peak where the Ripple SEC case, was sort of resolved and drew a lot more liquidity back in, right? And it was just a lower high. But 30 weeks out from that point puts you in February of 2024. And what's fascinating about that, Gareth, is that February 2024 is 2 months before the Bitcoin halving. And last cycle, total 3, bottomed 2 months before the Bitcoin halving.
Yeah. I agree 100%. And just, you were speaking about the .com bubble. I want to just show this chart. So this is a chart of the NASDAQ composite on the weekly. And the reason I'm bringing this up is because if we look at what we see going on here, right? If you look at, this is the .com right here, right in this area. Look at how the vertical move. In fact, this almost right here looks very similar to the dip that we saw during COVID. And I think this was the 90, there was like some sort of crisis. I don't know if it was Asia or whatnot, but you had this big dip and then the run that it had. And then if you look over here, same kind of thing where you had the big dip with COVID. And then, but look at what happened in this area here where we made a high with the NASDAQ, right? We made a high with the NASDAQ. And then here we had this big fall initially, then this huge retrace, like a huge epic retrace, but it was a lower high and then rolled over into that. And then if we look right here, it looks very similar to me, very, very similar to what's happening with the NASDAQ right now. And that speaks to me, that's important for the crypto market, because if the NASDAQ's going to fall like the .com period, and I don't know if it will, but I'm just drawing parallels, then it's going to be incredibly hard for the NASDAQ or Bitcoin to not go lower than here.
Gareth, if you could keep that chart up for a second, I would like to ask your opinion on something, because you see where the NASDAQ fell in 2002, and then it kind of got this rally, and then it rallied until the real estate market collapsed, right, in 2008.
Yeah.
The real estate market today doesn't really seem that healthy, right? Like this, I've sort of wondered, like, if we do get, I do think crypto will go through another bull market, and I think there will be another bull market, maybe out 2024 or 2025, and we can. Maybe at the time we'll talk about it, but I guess the question is it a tempered bull market like that one where it goes up and then the real estate market comes crashing down and it drags everything with it? What are your, I guess, and I'd like to go into it thinking that Bitcoin can go to new all-time highs because that's what it normally does. So I'm open-minded. Like I think that is a potential outcome that could occur if liquidity comes flooding back into the system. But I also want to be open-minded to what happened to those investors back there that were riding the NASDAQ back up, and then the real estate market crashed and took it all the way back down.
Yeah, in fact, on the SPX, it shows it, I think, much more accurately. Let me get rid of that. So right here, right? So this was your lead up into the .com, and we had the collapse, and then you basically had this bull market, but it actually just ended up double topping, right? And then you had the Great Recession coming in. And so I think that's a valid point. Is this what we're creating, or could this be the next bull market on Bitcoin only take us up to 69,000 again at double top, maybe pierce it, because that's what this one did. We made a slightly higher high. Now, why is that important, right? Slightly higher highs coax the last people in, and they stop out the last of the bears. And so that's where markets tend to top. And then you had the financial collapse here. So I think it's interesting. I mean, again, in my heart, I'm like, dude, Bitcoin is going to just go nuts, especially once institutions come in more so and everything. But then at the same time, you have to be aware of how cycles work. And there is a possibility maybe we just double top.
If you remember that regression model we were looking at earlier with the the regression rainbow, there's another pattern on there other than the one we discussed earlier. And that's that every high drops 2.5 log lines down, right? So like if I were to show it on this chart over here, you could look at this regression rainbow and see that every single high for Bitcoin, right? So like every single one, right? It drops 2.5 log lines down. It's like 1, 2, and then a half, right? And then a half, 1, 2, that's where this one topped. And then 2.5 down is where 69K was. And then so a half and then 2 down from there puts you at this one. That top right now is only at 42K, right? But again, like it's a monotonically increasing function. So, you know, by the time we're out in 2025, right, that regression model, you know, and let's say the end of 2025, right? Let's take it out until like November, you know, it's just above these prior highs, like, you know, somewhere between 70K and 100K, right? So I do wonder if that's going to play out again, where, you know, you sort of see, we sort of see like Bitcoin kind of come back down, get that secondary scare at the lower regression band, then go back up and then sort of top out up here, only to then come back down. You know, on this chart, like this looks like a lower high, but it's not, right? It is still a higher high. It's just that these lines sort of can make you believe that it's doing something that it's not, right, but it really would be a higher high.
Interesting. Yeah, man. I mean, you know, I plan to, you know, right now I'm relatively light on my Bitcoin holdings, you know, just a tiny position, but over time, if we do come down, I do plan to aggressively add just at the right levels. Like ideally, I'm looking for 20K where I'll start to kind of hodl in a little bit more and just kind of still every couple thousand down move in. But I do think, again, my bigger question then is, you know, Bitcoin's the obvious winner, right? Does Ethereum, we know Ethereum has made a lower low. Does that still have a rosy future? Do we still see that, you know, let's say going to 5,000 or higher?
Yeah, I mean, look, I know people, I've been very bearish on Ethereum for a long time, but I do think it will eventually go back up. I just think at first it needs to go down, right? I think it and by the way, I mean, with Ethereum, we also there's a regression model for that one as well. And, you know, historically, it goes down to visit that regression band before it goes onto a bull market that takes it to new highs, right? Yeah. I mean, sorry, I'm a little sick here. But yeah, I mean, so I sort of still expect Ether to sort of tag that regression band eventually. And then from there, I think it gets built up. You know, one great way I feel like and I think we've mentioned this a little bit, to people to visualize like the Bitcoin sort of cycle versus altcoins. Like look at Bitcoin and then look at things like Polkadot and ADA and Solana and Avalanche, right? And they're more or less doing all the same thing, right? It kind of shows you that the narratives and the fundamentals don't really matter. These altcoins, they more or less just do the same thing.
Right.
But a great parallel is you see where Solana like dropped a lot more than the other coins late last year, but then eventually it made its way back up to where they were.
Yep.
That's sort of how the altcoin, the real altcoin season happens, because eventually a lot of these altcoins will probably come back down to where Solana was initially, right? I think there's a good chance that like Solana is showing you where a lot of these altcoins are going to go. It just, the losses got pulled forward because of the FTX collapse, and a lot of them could go to that same area. But then just like Solana closed the gap on a lot of these altcoins, the altcoins that are going to survive could close the gap against Bitcoin eventually, right? In a massive bull market, right? That's where the altcoins make their most amount of, because that's why everyone likes altcoins in the bull market, is because they go up a lot. but people don't realize that they also get wrecked the hardest in the bear market year and the pre-halving year.
Interesting. That's a great point. Amazing point. So quickly, we're going to try to keep this to a 30-minute show here today, but a couple things I wanted to go over. So briefly going into the rest of the week, tomorrow, Apple unveils that new iPhone. So again, just kind of shifting gears away from crypto real quick. Apple right now is flat on the day. If I bring up my chart, one level to watch on Apple, very clear pivot high. And then we hit it, we bounce, we hit it again, we're bouncing. If this line breaks, this, let's say 174 to 175 level, and we see a daily close below that, I honestly think you're probably heading down to your next technical level, which would be very problematic for the markets, right? Because it's the biggest market cap company out there. So it has the biggest weighting in the NASDAQ, biggest weighting in the S&P. And we're looking at a potential move down to 155 to 156. The other things to just mention real quick, we have CPI on Wednesday. And then Thursday, we have PPI and retail sales. And Friday, we have export and import prices. Now, I don't know if you're in this camp, Ben, but for me, I don't think the Fed, based on what I'm seeing, the Fed's not raising next week on the 20th when they meet and give us their guidance. But this data this week could sway them towards the November meeting, which is still on the table. And again, I don't know if you have any thoughts on the Fed here real quick.
Yeah, I think you're right. I mean, I think they're likely going to skip at the next meeting. I mean, markets are currently saying a 93% chance. And I mean, at this point, like this close to the meeting, the bond market normally has it right. There aren't that many times, I think, where it would shift a ton. And I don't really think the inflation report is going to be that surprising either way. I mean, I think it would have to be drastically different than expectations for it to even shift anything on here. But I think you're right. Like if it shifts anything, it'll be the November meeting.
Right.
This one's probably locked in. You also mentioned Apple. So I just wanted to sort of show one chart. Here's the year-to-date ROI of Apple, the blue line, and sort of that orange line is sort of the year-to-date average of all prior pre-election years. And it looks like Apple has kind of already potentially hit either its high for the year or near the high. I mean, you could still get an uptrend later in the year if the recession risk does not materialize in Q4, but this could sort of mark that high. As you can see that like that level is 1.52. And averaging out all prior pre-election years, Apple topped out at 1.55 off of its yearly open. So just something to keep in mind for people that are following the Apple chart.
Yeah, absolutely. And then a couple other things that I wanted to mention real quick is we do have some other key stuff coming up. Obviously, Fed next week, but watch some key stocks like Nvidia is starting. We're starting to see these AI stocks struggling a little bit. And today, for instance, markets, the Nasdaq itself is up, but Nvidia is lower. And I do have this beautiful channel trend line, which again means that we could be headed down to about 420 on this stock. And then eventually I think this breaks and there's a gap filled down here at 305 that eventually gets tagged. But again, I think, just to leave with some parting words here. Number one, we see your comments and they're amazing. Some of the things you guys are writing are really, I think Ben and I both appreciate the kind words, and it drives us to do these shows and spend our time to do these shows and put out the best content and really stay up to date on all the market stuff that we have. And so I think that's wonderful there. I did see someone mentioning Tesla. I can quickly just go over Tesla into the end here. But Tesla's having a big move today. They got a big upgrade from Morgan. I think it was Morgan Stanley with a $400 price target. However, we are starting to get into some resistance up here on the daily chart. So a little bit of resistance in this upper range. The big question for me is when they roll out the Cybertruck and the redesigns for some of their other cars, you just want to see how those sales are. Overall, I'm kind of not the biggest bull on Tesla because they keep on slashing the prices of their vehicles. When it's selling good, you don't cut price, right? And it hurts your margins. So if they're going to be long-term, big profitable player, they got to kind of establish these price points and stick to them, and they got to see the sales to back them up. So keep an eye on this 270 to 275 level on Tesla. And yeah, man, Ben, do you have any kind of closing thoughts out there?
Yeah, well, with Tesla, that's the thing. I mean, there's only so many times they can lower the price before it really starts to eat into their margins. And then at that point, that's normally when the recession happens and the Fed finally pivots because the companies can no longer bear these higher rates and all the QT. I think the thing we should end on is, we don't always provide the opinions that most people are going to necessarily like, but the great thing about it is it's just our honest opinions, right? I mean, and that's what you're going to get here. You're going to get our honest opinions and nothing more, nothing less. So if you guys want to continue to do that, make sure you guys subscribe to both our channels. If you're watching me on my channel, Gareth's links are down in the description below. Not only to his YouTube, but his Twitter and his website as well, in the Money Stock. So make sure you guys check that out. And we'll be here. I mean, look, a lot of people fall off in these times. We're gonna be here every step of the way, and try to see these times too, to better times eventually. But
yeah,
this is where we are in the cycle right now, and we want to make sure we provide the data to support our views.
Yeah, and just going back to what Ben said and reiterating is like, I wish when I was a new trader that people were more honest with me and didn't hype me up about things, because honestly, I would have lost a lot less money. And that's what we're just trying to do. Like Ben said, we're just trying to keep it real with you guys. This is what the chart says. This is what the data says. We're going to tell you. Sometimes it's going to be what you want to hear. Sometimes it's not going to be what you want to hear, but we're going to tell it anyways. And on that note, again, make sure to follow Ben, check him out. Like I said, he posted an amazing video that I saw on Twitter this weekend about those regression lines, and I found that amazingly insightful. So hopefully Ben and I can continue to work together for years to come and deliver what we can to you guys. All right. Have a good one, guys.